Alright guys, welcome to my video. Today is 6th of January 2026. Yeah, this is my official first live stream for the year. And yeah, the market has been on and active. I just want to give a little explanation or a little view on what I've been observing on gold since morning, and also a brief kind of explanation for those who are also new into trading, so it can be helpful to them as well. So quickly, let's go to higher time frame, which is 1 hour time frame. Let's go to 1 hour time frame. Okay, for those who are new to trading, let me start by saying this. There's one thing about the forex market. The forex market, one very key important thing you need to know about the forex market, and one of the major reasons why the forex market cannot be a gamble, the way some people who are not into trading tend to see it. They see it as a gamble, but we who are traders, we know it's not a gamble because of what we've seen in the market. It's very possible to analyze the market, and it's something that when you are good at it, you are good at it. There's no how you can see it as a gamble. So one thing you need to know about the forex market is that the forex market do respect what we call key zones. Some people call it support zones, resistance zone. So, but all you need to know is that the forex market do respect key zones. And what are key zones? A key zone is a zone which are being okay, let me put it this way. A key zones are zones that maybe are zones that are being okay, let me just show you on the chart directly. Okay, this is what we call key zones. If you observe this now, this is a key zone. The reason why this is a key zone is that when you notice there is a small consolidation right here, and then the market broke through that very consolidation, which naturally you could have expected it to be held, but it broke through it and it came back to that very same consolidated zone at this point right here. And if you notice, when it came back here, it respected it and it sold down. So now what we call when we say the market is selling is like the market is going down. Buying is like the market is going up. So when the market is going up, we say, okay, the market is buying at this point. When the market is going down, we say the market is selling. So, and then the zones where the market is selling from, the zones that are being respected, where the market is being held and pushed downward, are called resistance zone. So this very zone here is a resistance zone, while the zone where the market are being held from to push upward, like this very zone here, we call them support zone. So this zone is a support zone. It helped to support this very push of the market downward. It had to support it and pushed it upward, backward again. So now when we say key zones, in a simple layman explanation, are zones that are being where the market is being held. Yeah, let me put it that way. Where the market is being held to change to a different direction. Those are key zones. Anywhere you see the market is being held, maybe the market is coming downward and you notice that sudden change or reversal, those zones are called key zones. So it's left for you to now take note of those zones in the market. You need to be observant to know those very zones in the market. Are you getting it? Because those are the zones where you take your entry and your exit from. So, but if you don't take observant of those zones, it means you might be the liquidity. There's something we call liquidity in the market. So you need to know where those liquidities are. Each key zones are liquidity zones. There are zones where decisions are being made between the buyers and the sellers. Are you getting it? So how do we spot the key zones in the market? when you see something like this, there's something we call a break and a retest. It's a strategy that some people use to analyze the market. It's called a break and a retest. So naturally, when you notice the market move from this very zone, it got to this point, you notice it made sudden change and sudden reversal from this very point. Automatically, this is a key zone. Are you getting the point now? It made a sudden reversal from that point downward. Now, when it came down, it was held at this point. This is also a key zone, holding it, pushing it upward from this point. Now it went up again. It broke through this very key zone. This is a key zone right here. Are you seeing it? It's a key zone. It broke through it and it came down. The reason why this is a key zone, if you notice, there was a little kind of resistance at this point, trying to make the market sell, but the sell was not massive. But if you notice, at least you could see those red candles trying to push the market downward, and then it was then broken, came back to that very zone. The zone was then respected and pushed the market up from that point. So these are why forex market is not a gambling market. It's all there for you to understand that you don't really need to be making it complex. You can make it as simple as you can. It's just to know that the market do respect key zones. Now, all you need to do is to spot those key zones to make your analysis very easy. So that's what I've done here. If you notice, this key zone was being respected. The market pushed through, came back to this very key zone. It was still respected, pushed through. That's how to map out key zones. Now, what's happening presently? This very zone that was being held twice, pushing for the sell. Later on, when the market came down to this point, it reverses from this point, and that sellers couldn't hold the market anymore. It pushed through, came down. Where is the next key zone? This is the next key zone. If you notice anywhere I'm marked with a green line, that's like showing you the zones where buyers are. We call it a demand zone. You understand? So some people call it demand zone. All are just terminologies. All that you need to know is just to understand that these are zones that can help buyers. These are zones that can help sellers. Any name you choose to call it, it doesn't mean anything. So this very point heads for the buyers and push the market upward as well. Now what I do is I just come to higher time frame like this to spot the key zones when I've noticed the key zones, and then I'll go down to my lower time frame. So in this higher time frame, what is happening in the market? The market is actually bullish. When we say the market is bullish, it means the market is moving upward. The market is buying. So the market is bullish, but you tend to notice some little retracement because the market doesn't move in one specific direction. I mean, even if it's moving in a specific direction, which the main movement is bullish, but you tend to see retracement. The reason why you see those retracements are because the market is also respecting some other key zones, pushing for the sell. But because the overall movement is buy, it keeps moving upward. Even though you see those little retracement, the retracement will still come down to a zone that will push for the continuous buying. Are you getting the point now? So now when you notice this market is obviously a bullish market because it has broken this seller zone. When it pushed forward, it came to the next possible sell zone, which is this very zone. This very zone is the next possible sell zone. It respected it just for a while. Now, when it respected, it came down to the next buy zone. Now, because the overall movement is buy, it tends to still push the market upward from the next buy zone. So you see how easy forex can be. It's just for you to understand those key zones. Now, from here again, some people took advantage of this buy from here and entered, capitalized on the buy. So the next possible zone for this next possible sell is this very zone I marked with red here, and that's why you could see a little sell from there. For those using 1 minute time frame to analyze, they could have gotten some amount of pips from this point, but though it's risky to trade against the trend, it's very risky. You need to stick to where the main move is going to, so you don't get caught up. So now the next sell zone is this very zone I highlighted here. That's why you are seeing some little retracement. Now what I do is this. My main place where I take my entry is under 1 minute time frame. If I go down to 1 minute time frame, you notice I've marked the key zones, because the 1 minute time frame key zones are also being respected. But there are times where the 1 minute time frame key zones will not be respected. Anytime you see that 1 minute time frame key zone is not being respected, most likely when you go to higher time frame, you notice there is something on the higher time frame that is pushing it downward. So just like this now, for instance, I was on this buy yesterday from here on my 1 minute time frame. I capitalized on this buy. It got to this point. So when I noticed it got to this point, I noticed that my 1 minute time frame has like the supported zone on the 1 minute time frame has been broken. It's not being respected anymore. At that point, I noticed this very sell zone right here. This is the sell zone. Let me show you the sell zone. Let me highlight it properly. Okay. Now look at the sell zone. The sell zone is coming from here. This is the reason why you see that sell, because this is a key zone. This point where my cursor is it's a key zone. Are you getting it? So the moment the market got there, it broke my 1 minute. I'll show you on my 1 minute now. It broke it down. I noticed, okay, at this point the sellers are active in the market. Are you getting it? So what you do when you get to such zones and your 1 minute time frame is not being respected, your 1 minute time frame key zone is not being respected anymore, what you need to do at that point is to take maybe partials. If you know the overall movement is still what, bullish, you just take partials, and then you set a break even, just in case the sellers are now stronger than the buyers. You will not be losing some money. So when you go to, let's say, 5 minutes, let me use 5 minutes to make it not look so choppy. Now look at that very zone right here. Okay, so look at the zone. This is my 1 minute time frame zones that I marked as well. So when it got to this zone, I noticed, okay, it has broken my 1 minute time frame zone right here. At that point, I know that, okay, sellers are much more stronger. The moment I see this thing is being taken out, because as this one was respected, I expect this to be respected continuously, keep forming zones like that. But the moment I noticed this was being broken, I was on the buy here. Are you getting it? I had to take partials immediately. And after taking partials, I set my break even, because I know if this is being taken out, there are possibilities this will be taken out as well. And the major reason why it's happening is because it's coming from what? The higher time frame. I get to the point now. It's coming from what? The 1 hour time frame, higher time frame, pushing it down. So I noticed, okay, that was what happened right at that point. The sell continued till this buy zone. You see the buy zone I highlighted on the higher time frame. At this buy zone, it gave another break of structure to the upside, and then I capitalized on this buy. Are you getting it? This is how easy the market can be. Okay, I don't want this video to be so long. I'm on this buy now, and I caught this buy from here, actually, not from here, because I was waiting for a buy stop here. I caught it from here, and I already I took partials already at this point. Because why did I take partials? This is the reason why I took partials. This is a zone right here. This is a 1 minute zone right here. If you notice, this zone was being respected at this point, but now it was taken out. So at this point, I know, okay, there are possibilities that the fact that this zone was taken out, even though it's not showing me, it has not gotten to where I want it to on the higher time frame, but the fact that the 1 minute time frame is already breaking structure to the opposite direction, there are possibilities that sellers might take over the market. I had to take partials immediately while I still held one position. But if you notice now, it's respecting this point, but it could still sell. And if it's to sell, if I'm to buy again, I'll buy from here. If it should sell down, I expect it to sell to this point and give me an inducement. There's something called inducement. As time goes on, I'll do short videos, try to make proper explanation. All right, we'll go. I'm going to end the live here. Thank you for your attention.